Welcome to TheoTrade. This is Don Kaufman. July 17th, 2024. 7 minutes to go to the cash close. And, well, what a trading session it is. Selling has just consumed big tech. But let's get right into it with what you can expect next. All right, breaking down this marketplace here on this Wednesday afternoon. S&P futures down some 71 handles. Before anybody gets all hopped up about some of the sell side activity in today's marketplace, you got to recognize and kind of rationalize 70-point move is only, 1.25%. I mean, look, we haven't seen a lot of sell side activity. Everybody kind of forgets because now we're a $5,650 product. So on the percentage basis, all right, it's a 1% move. Like you're not even statistically significant till you get to about 3%. Meanwhile, as I was saying moments ago, well, tech has been consumed by some real sell side activity. But hey, look, it's still shy of that 3% level, right? Down about 2.6% with, as I said, just a few minutes ago to the cash close here. But on a point for point basis, yeah, it's big. I mean, you just can't deny it's a 500 and almost 50 handle move inside of the NASDAQ. The NASDAQ heading right straight into the 20,000 level, that basically being the bottom. But overall, the sell side activity, I mean, it has been incredibly isolated. And therein lies the risk. So everything we're seeing right now inside of this marketplace, and I say right now in this marketplace may get wild here in the last 5 minutes of this trading session, but everything you're seeing, it's predominantly tech. And before I start bringing up individual underlyings, like, look, newsflash, Microsoft's down. And so is Apple, and so is everything in tech. But the really stellar part of today's trading session is the S&P 100 advanced decline line. Now, I have mentioned this, okay, ad nauseum. You gotta look at that S&P 100, okay, and then take a look at the positive advanced decline line. Now, to me, you're looking at it and you're probably thinking like, whoa, that's actually quite good. That should strike fear into the heart of any experienced trader. You recognize that we're capable of being down, okay, this magnitude with a positive advanced decline line, and that at some point, if sell side activity were to persist, what you would actually get is a higher degree of correlation where all of a sudden you're no longer 65, 36, where this ultimately snaps and you see broader sell side activity starting to hit the marketplace. Now, I've mentioned this a lot, and I'm actually going to show you here in just a moment. How are you going to know? All right, other than looking at the advanced decline line, which is obvious, but today's trading session, I don't sound all again, I'm like, hopped up. Oh, there's some sell side activity. Look, you needed a pullback. Pullback, well, needed to happen in big tech. You realize, though, products like financials, okay, what do you got? It's a new high. I mean, you got to open up like 15 years to really express like how wild some of the moves are. That's the financials, okay? No problem. You take a look, the energy sector. What is it doing right now? Pretty strong bid back. This is not new highs, but a fairly strong bid back under, again, the energy sector, the financials. There's pockets of strength in here. In fact, if you follow me to kind of the bottom of my screen, if you look at like, healthcare, still breaking to the upside. This is the XLV, okay? The XLP, which of course is consumer staples, okay? New high, breaking up to the upside over here. And I've been talking about this a lot. I mean, look, trade right now is simply buying, well, crap that no one has wanted to buy in months. You're looking at Lowe's, you're looking at Home Depot, okay? Ford has been a breakaway to the upside. Again, these pockets of strength. Now, as I said, before you get ahead of yourself and you're like, yeah, you see, okay, these rotations, if selling persists in NASDAQ, these rotations are going to cease to exist very, very quickly. And what it's going to feel like is that the marketplace snaps. Now, again, tech selling, everybody sees that. Where is the epicenter of tech selling? You'd probably have to point out Meta or NVIDIA. But NVIDIA is going to be the clear kind of and cut leader of the pack. NVIDIA is also a little bit disconcerting because it's a possibility of like kind of a double top over here, but a pretty significant break. The other aspect of NVIDIA that something I've actually thought quite a lot about, specifically over the last few days, the volume inside of the option marketplace is just once again stellar. I mean, the put activity is also really picked up in here. I mean, but NVIDIA doing almost 6 million option contracts in today's trading session. Okay. What you're seeing though at this point in time, like as I said, I don't want anybody to get too hopped up. This is it. This is the big one. Look, it's just selling has consumed big tech. But the selling that's going on right now is much more indicative of just kind of a negative gamma squeeze. Like a lot of the gamma squeezes that people are talking about, over the last few months and years, those gamma squeezes, they're still negative gamma squeezes, but it's been to the upside. Negative gamma squeeze can also pertain, okay, to sell side activity. And at this point, I don't see, okay, any real concern in any of these products just yet, but we might just be scraping the surface of some of the sell side activity. A little more disconcerting though, when you start to look at products like Meta, okay, and you bring up like auto expected moves, this is starting to hit some real statistical significance of how precipitous the drop has been. Now, I look at expected moves. Some of you might prefer just pure percentages. Okay, and looking at a percentage drop over here, you have Meta down approximately 15%. And there's the closing bell. You have Meta down approximately 15%, and you're basically a week and a half of trade. So there's definitely some damage inflicted there. I can't, again, NVIDIA is down, but sell side activity today, yeah, it's extreme. Look, it's almost a 7% move in here. But overall, okay, this marketplace could have been significantly more damaged as a whole, and that's exactly what I'm going to bring up. By the way, look at the NASDAQ. I was talking about statistical significance, okay? Exactly a 3% move. Moreover, if I actually look at the QQQ and bring up auto expected moves, we're actually shattering the downside of the expected move specific to the Qs. The last time we even hit, okay, outside, okay, of an expected move in the Qs, you got to come back here to late May, early June. That's the last breach of expected move and at all to the downside. So some significance, obviously, to today's movement inside of big tech. All right. With that, by the way, S&Ps literally closing at their lows. One thing I want to point out also inside of the S&Ps, this is a level we've seen a tremendous amount of. It's 56.32 inside of the S&Ps. Hey, look, lo and behold, what are we? We're basically back to where we were like last Friday. So all the damage you want to talk about, we're just back like what? Backtracked a couple of days in the marketplace. Nothing too crazy. Look, here is what you need to consider, though, moving forward. The rotations, they're clearly still intact. How do I know? Just look at the advanced decline line. So one of the things moving forward, as I said moments ago, when this advanced decline line gets a little bit more serious, if there's going to be more persistent sell-side activity, I do believe you're actually going to see the rotations start to break apart. But with advanced decline line, to me, the single most pivotal aspect, it's got to be volatility. And I'm not talking about VIX, because of course everybody's going to look at VIX and like, I think it moved. Okay. The VIX is an equation based on SPX. And we can look at all kinds of volatility indications. So look at VVIX. VVIX definitely picked up. I mean, come on, volatility moved. But if you want to see, okay, if this move is much more like if it's going to bite, if it's going to grip hold, you look at volatility futures. Now, the volatility futures, if you're looking at this right now, you're like, oh, they're up huge. No, they're not up huge. Absolutely not. Okay. What am I basing that on? This, okay, is a contract change. And on this platform, which is Thinkorswim, which I'm not maintaining it very well, that's a contract change. That doesn't count. Okay. In the end, if you actually come in here and you go under futures, you go adjust for contract changes, hit apply, hit OK, right? Even that doesn't work. It's ridiculous, right? What you're looking at, though, again, it's a contract change. And lo and behold, the volatility futures, and this is what is so important, not VIX, okay? Yeah, you can trade options on VIX, and I get that. But trading firms right now are massively short, okay? Short these volatility futures. Selling could really get extreme if the vol futures start to pick up, and a 3.79% move is not it. I mean, you can see that the S&P is closed in the lows, the NASDAQ down 600 handles, like on the button. What did the volatility futures do? They didn't even actually pick up. I mean, they like lifted their head up off the mat, but it is nothing, okay? This, to me, is one of the most imperative instruments to understand as we move forward. Again, selling may consume big tech. Maybe it takes a couple of days of sell side inside of big tech before anybody big steps in. But we want to look for higher degrees of correlation clearly to the downside. But even then, it's got to be done on volatility, because what can occur is a really wild feedback loop. And the feedback loop would work like this. The advanced decline line starts to come down. As the advanced decline line starts to come down, trade, starts to reach for volatility. Volatility effectively goes where? Higher. As volatility goes higher, the traders that are caught short volatility futures will sell S&P futures. And you actually will get caught, in a perpetual kind of feedback loop around that. These vol futures are critical moving forward. Last, but definitely not least, we take a look at the SPX. And again, kind of looking at this, and there's some moderate sell side activity, but the damage inflicted to the SPX, people, we're not even halfway home to the lower edge of an expected move. Now, I'll remind you, because I said this early on in the week, I said volatility, the juice isn't worth the squeeze. I've said this the last 2 weeks in a row, where I was like, look, the expected move this week is about $63, right? So you're supposed to move $63 higher, $63 lower. And that juice ain't worth the squeeze, meaning that you wanted to be a buyer, a buyer of any short-term options. And look at some of the movement that we're actually getting in here. This will be pivotal, coming into, of course, Thursday and Friday. And it is important at this point that where the lower, expected move is. And what I'm going to do for you right now is I'm going to zoom specifically into that. We're going to go all the way down to an intraday, 1 day, 1 minute, just to display exactly where this is, and it is roughly 55.52. Again, 55.52. Now, this is a hand-drawn expected move. Remember, 55.52, that is, again, the lower, expected move. If this comes into play, either on Thursday or Friday, then we're at a much more critical break point. And if we start to cross through 55.52, that is when you could really see those volatility futures ignite as traders reach for any means to mitigate some of that risk. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.